Hello guys, in today's video we are going to talk about order blocks. So basically we'll discuss what are order blocks, why they are important, how to spot them, how to use them, and we will also talk about some of the disadvantages of the order blocks. So let's dive straight into the topic. As for the order blocks themselves, basically those are the price zones, also known as the supply and demand zones, we could say. And basically those are the zones where big players like financial institutions, health insurances, big banks, so on and so forth, big players that can move the market are placing their orders. And the number is huge of those orders. So basically those are the zones where they try to fill their big orders. So that is why you can see that, for example, at some levels, price stops, tries to, bounce up and down, back and forth, and after some time, the price reverses. So basically, these are the moments where big players steps in and try to scoop all the opposite side orders to fulfill their one big orders, which is basically divided into many more smaller orders in order to not push the price too much to fulfill them at the best price possible. Because, for example, if they will send that one big order, the price will immediately bounce from a certain level and they basically will not be able to buy or sell some particular asset at the best price that they want, because, for example, the price will bounce heavily from such a level, because everybody will see their order and basically, okay, they want to buy this asset for this price, so let's pump it and earn the profit. So basically buy before them and sell them with the margin. So basically that's how it works, and as you can guess, based on this short and easy explanation, they are very important. So let's dive straight into the chart and let's discuss how they look, how we can use them, one simple strategy, and basically we also talk about some indicators that you can use to spot them, to basically somehow automate the process and to make it easy for you. We will discuss, as I said, one disadvantage that this type of trading has, because it's not a holy grail, I need to say up front, and basically this type of analysis requires as well to use other methods to supplement it, because it's not 100% accurate as anything in trading. So let's dive straight into the charts and discuss the order blocks. So basically we have the XAU-USD, which is a gold chart. This is a daily chart and it doesn't matter. To be honest, in terms of the probability of order blocks to work, we should look for the chart at the time frame H4 and higher. So basically H4, you have also in trading view 12 hours, 1 day, 1 week, so on and so forth. But I think the best are 4 hours, 12, 1 day, and sometimes even a weekly chart. So first, the thing that we need to spot is to, of course, the moment when the price moves in a certain direction. So we need to have a clear trend, and the price should, for example, stop at some support or resistance level. Here we have the resistance, and the situation next must develop as follows. So let's say we see a situation like this one over here. The price stopped here. If we check the left side, I think we do not need to have a bigger explanation why those levels are important. You can see how many times the price bounced from those levels. We have this zone over here, this moment over here, this moment over here, this moment over here. So as you can see, also the price bounced heavily from this point. So you see what I have on me. Okay, so we see the moment when price reaches this level. We have the clear green candles, up movement, and here we start to, the reaction starts in the opposite direction. We have the first red candle, some green candle, and it is basically a hammer candle because the upper notch is very, very small. And next to two candles we have, let's zoom in more. And so we have this red candle, which the high of this candle reaches the highest point, and we can say in this whole move. And the next one is also red with a very big body. And basically, as you can see, we have this engulfing pattern. So what I have on me is that those two red candles engulf entire this green candle. And so next step for you to do is to mark the zone, the order block, in this situation, the supply zone. So what we should do is to check the last candle that those two were engulfing, which is of course this hammer candle for us. And we mark the zone from the high to the low of this candle, and we stretch it to the left side. And for us, this is our supply zone, this is our order block. So next thing what should happen is for the price to retest this zone. It can be once, twice, couple times, but basically it shouldn't make any higher high, and in the opposite situation any lower low. So basically the price should respect this zone. Ideally should retreat to the half of this move downward, which basically took a little bit more than a half, but it is very good for us to as an example. So we see that the price moved downwards, return once, bounces inside the zone, again retest the level. So we see that initial move, initial reaction that we see, there is a supply in this moment, so there are sell orders right over here. The next thing is another bulls try to push upwards, and another round of sell orders goes in here. Bulls try to again push upwards, another round of sell orders, and again until basically we move out of this zone and the trend reverses, as you can see over here. So next thing that we should do is to look for the moment to entry a sell trade for us. So what we should do next is to spot the lowest point in this move. So basically we look at the initial move. It was moved to the upside, we bounced from here, we make the low over here, and basically this is our moment where we are looking for our, we could say, lower border of this consolidation zone, this we could say distribution accumulation, whatever you want to call it. And so we are looking for the breaking out of this level over here. So for us it would be this candle over here, which closed below this border. So of course it firstly should be a long candle with a big body. It shouldn't be a candle like this with shadows and so on. So this should be a long candle with a big body. This one isn't super ideal, but it fits our description. It is a decent, and it broke out of this zone, right, which we marked over here. So here we are placing our order, our short position, stop loss. It will be a little bit higher than the highest point in this sequence. So as you can already see that this trading method is for rather more like a swing trading. So basically those trades could last for weeks, even days for sure. So these trades are maybe not that often spotted, but they are quite accurate. But this is only one method. I'm referring to this method, referring to this, we could say, situation and this kind of setting an order, basically to understand the concept. And so, as always, as for the take profit, we are looking for a risk-reward ratio 1:2. So what we should do, zoom out, 1:2. and we can see that even over here, as we saw previously, we return to the zone. That would be not big deal for us because we are looking at these levels of stop loss. Again, retested the level, again, went back, retested this zone, and finally we broke out of this whole we can say a sequence. And you can see even that that was, maybe let's delete that, this candle was the moment where we should look for the entry because it was that candle was a clear signal. But if we don't see the left side, and for example we have situation like this, we can think, okay, we finally broke out, we will go down. So what happens next is of course out of our control, but at such moment I think that would be our logic in order to to act. So we should also remember that anything is in trading is not to the pip, it's not perfect to the point. So yeah, some margin of errors are inevitable. So you can see that this trade worked out, and firstly, as for the take profit, as I said, we can be referring to 1 to 2 risk reward ratio, but on the other hand, if the situation becomes the same in the opposite direction, so we are approaching to the next big in this situation will be supply zone, where there is a big demand zone, where there is a big demand on the asset and there are a lot of buyers. Here were a lot of sellers, and something happened over. No, not over here. We didn't have the engulfing, but yeah, the price reversed. Never mind. If the situation will happen that we will have a similar scenario, that we will have a strong, we will have a downward move, and we will have engulfing pattern, and we will retest it. The same situation as over here, or similar. We retest it once or twice, and then we will see a big candle that will break out of this consolidation of this supply zone. That would be also our trigger to exit this previous trade if you will see something similar happening over here, because that would be indication for us that okay, here we have also very strong zone, demand zone that could basically be stronger than this whole move. Maybe the sellers are already exhausted over here and we should exit our previous trade. So that's as for the short version. And as for the long version, we have another situation here on gold. A little bit further, I marked those situations for myself. Give me a second. We need to rewind the... Yes, okay. And we have one fake one, which we'll discuss in a moment. So, again, the situation over here. We look to the left, we see, we could say mid-term downward move. The price went over here. We have those two red candles. We have this, let's zoom in. We have this green candle, and the next green candle is with a very big body, and it is engulfing those even previous twos, this one green candle and even this red candle. So if we see something like this, then we are checking the left side. We are looking for potential support zone over here. And if we go to the left, we can see again that the price was reacting at those levels. We have this movement over here, here, and we have this little battle over here. Of course, if you are trading on a daily basis, you have your resistance and support zones marked already, so it will be also easier for you to spot those moments. And again, next what we need to do, of course, is to mark our demand zone in this situation. So we are looking for this green candle, basically from the lowest point to the highest point. So we are measuring also the notches, and this is our zone. What is also important is, as I said, the price cannot make lower low inside this, no, at best inside this zone, but we have this green candle which made the lowest point. So this will be our point of reference for the lowest lows. And we have upward movement, we have the retest, upward movement, retest again, and we have green candle, short consolidation, green candle, big with big body, short consolidation, green candle. So what we are doing, of course, if such a scenario occurs and we have this previous setup, we could say, again, we are checking how we are breaking out of this, we could say, zone, out of this demand zone, out of this movement, because this reached, set for us the range of the price. But we kicked out it, we could say, in this situation with a very big green candle, with a big body. Therefore, for us, next point over here is our entry level, which is the opening of the next candle. And again, we are looking for the stop loss over here. And 1 to 2 risk reward ratio. So you can see how far this move would take. And as you can see, again, it is, this one was profitable. So again, as you can see, the price stopped. We are marking our zone, waiting for the next what will happen. The price created an engulfing pattern, retested the previous zone once, twice, and we broke out strongly with the big candles with big body, and there are also, as you can see, almost no shadows with those candles. So that is the easiest way without any additional tools to spot those order blocks. And let's discuss quickly this fake order block. So basically we have the situation over here that if we check the left side, of course, it is a very strong zone. We have this movement over here. So we could say that, okay, price stopped. We have the engulfing candle, okay, but we made a new high. That's the second point. But okay, new high, but we have here clear engulfing pattern. We have two big red candles that engulf this green one. So what we should do is to mark our zone, right? And wait for the retest, but the retest never came. So we went down, but after that we reversed upwards. So as you can see, those patterns repeats themselves. And as for the indicator, there are many indicators of the order blocks, and I will recommend you the one that you most likely already saw on this channel, which is the order blocks by the user SonarLab. Even Peter in other of his videos is referring to this indicator. So you are typing order blocks and with a space. Yes, with a space. And you have the indicator, the community scripts. So I am using TradingView. TradingView is free. You will just have a small ads on the left lower side, but other than that, it is free. You can use this platform and do your analysis. So order blocks with the signals by the user SonarLab. Click on that. Misclicked. Again, click on that, and it will add the order blocks to your chart. And as you can see, it basically automates some of the process. It's not ideal as we did our analysis previously over here, but it marks some of the levels that are also worth considering, like this one over here, right? It was not significant, but there were a lot of orders that the indicator spotted. We retested this level, and from that you saw what happened. What was the risk reward ratio over here, right? So again, you can see order blocks over here, retested over here, and you see what happened, and so on and so forth. I highly recommend this indicator and this simple strategy. Of course, add your own methods, your own methodology, your own strategy, and most likely your score, your profitability will improve if you use this method, this indicator, and you will also analyze the markets in this way. So as for the disadvantages, the cons of the order blocks, there is just one, we could say, obvious flaw of this method, and is that it is very difficult to say 100% that at this level there is a lot of orders, so on and so forth, and they will not run out, that the trend will reverse, because we don't have that much tool to analyze the market. We can only see what is happening on the chart. We can only see, for example, if you are trading stocks, and if we have some data from the brokers that we can analyze them, but each and every situation on the market is unique, and there are unique fundamentals for each of those situations that we cannot basically predict what they might do, how they might influence the market participants. So that is all as for today, as for this video. Thank you guys for watching, and I'll see you in the next one. Take care and goodbye.